Hello, hello, and welcome to March 29th Alphas. KR takes the lead at 56%. It's the horse race again. Last Friday we had ITB at 70 something percent, and now it's down at 52. So and KR jumped over and took their lead. As I mentioned before about KR, it has a nice 45-degree angle of incline, and we crossed the third ratio. So by closing the third ratio, our stop is now here on this flow here. This is our stop. That's going to be March 24th. So let me go ahead and adjust this and put in the start date for March 24th, which is where we're taking the low off. The exit is off that low right there. So that's going to be where we're at now. Plan of attack. We will continue this track until we get a dipper low. This is it. Dipper low right there. Higher low, higher low. It comes right out of the playbook from day traders. Our next stop would be is we get one of those, or KR is able to continue this momentum and cross and close above 100 ROI. Closes above 100 ROI, then we'll go to the last bar low to take profit off the table. That said, that takes us to IBT, who was the leader and has now fallen back. And it's right here. There it is. And there's the fallback. Unfortunately, it happens. But as we saw earlier with KR, they had a big of a fallback on their own while they were going into their upcycle also. So we'll just get, now their line is not as good, 45-degree, but it's starting to show some indication here. We're going to have to just wait it out and see what happens. We are 76, 69.18, and we need to get to 74. That's virtually $5. The ATR on this is 2, so this is still looking at a $3 potential to get. Well, the close was here 66. So we're $8. $8 is 4. We're 4 days away from a perfect opportunity of getting up here and past the third ratio. And remember, it's only laws of probability, and we see what the market does. Going on now to CVS. CVS has come into the field. And, they went to profit territory. They were negative, and they went to profit territory. And you can see that. Oh, we can't. The bubble is such a no way. Okay, there we go. All right. It's a nice inclining coming up. Nice little rolling hills. It's still good. We closed at 76.87, and there's $80. So we're less than $4 away. And we're $1.66. So it's about 2 to 3 ATR days away in a perfect trading world. Perfect trading world. We would love to see that one. Okay, that takes us to T, and here at T is we have AT&T, and they are. Oh, this is a nice incline. This is not. This is pretty. This is real. This is really nice textbook here. Moving along, they closed at 30.56, and we need to get to 30. That's one or less than $1 away, and it's ATR 50 cents. So we're looking at a potential of 2 days to get that close. If we get that close above the third ratio, then right here is our dipper low right there. Higher low, lower low, higher low, and that would be our first. That would be our initiate second rule of exit. And the second rule of exit then will happen here on T, and then the third rule, of course, is RI 100. Alrighty, so now go on now to our. We have quite a few good positives today. Coming now to the Walgreen, and here at Walgreen, also a nice incline coming up. It's 56. It hit the 50. It closed here at 52.85. So that's $8. Less than $8 away, and the ATR is $1.50. So that's what I'll tend to focus on there. Okay, now we're coming on to Adobe at 4%. Adobe at 4%. And there it is. Now this one here is a push. Now this doji right here could mean, doesn't necessarily mean that it's going into reversal. It could be what they call a rest after battle. Jerremy Newsome, one of my past instructors has that coined that terminology, rest after battle. So it battled its way up, got to this point, and now it's taking a bit of a rest. Remember, this could be accumulation because look at the flat line through here, and then price moved on up here. And there's been some positive news in the market about Adobe, so it might strong possibility of getting up there. So that is the last of our positives. RTX, Raytheon, Gold, Royal Caribbean, T-Mobile, uh, Ring Energy, and Sundial are all in negative territory, and that is on that. Now, I need to bring to your attention too. We did a title shift change here today, and the point comes down to the people are more interested in, are we ahead or behind the market? So how do we know if we're anywhere near the market? Well, the SPY is the benchmark. That's the market. That's 500 of the best American companies. Now, the way the benchmark works is very simple, and that is anything beating that is ahead. Well, right now, Alpha, even with the pullback that we had from ITB the other day, Alpha is running at 5% above the 4.4 from SPY. Now, where do we get that SPY? We get it from here. Let me go ahead and bring that up. There it is. And there it is, year to date, right there. Right here at Yahoo Finance, year to date, 4.4. So our titles are now going to start reflecting, are we ahead or behind the market? That's the ultimate point. Now, another point in case to bring up about too is that in the IBD, Investor Business Daily, they publish a weekly, and they the weekly on their weekly Saturday, and they have a roundup of mutual funds. And I know mutual funds get excuse me, mutual funds get a bad rap about fees and more fees. But at the end of the day, unless there's a better vehicle with no fees and great returns, there is, and it's just more of a marketing ploy. But the bottom line about is that in the IBED, they feature mutual funds who have 10-year track records, and some of those guys are producing 15 and 17% return. So, yeah, granted, okay, so it's 15% return, and let's say that it was a high. Let's say, for an example, it was a high mutual fund. You lose 2% on fees. You're still making 13%. The law of doubling is 72 divided by a number, and that number is going to be 13% with per annum. That means that the account will still double in 5.5 years. So if you have a 401k and your performance is running 15% or plus per year, and you really can't do much about touching it, the bottom line is that it's still looking at doubling every 5.5 years with the ups and downs. And the other part too, about the secret to 401ks success or better for the worker is that when we get into hard times and we have a market crash, do not reduce your contribution. As much as it hurts that you need the money, the bottom line is you're now buying in at the bottom of the market. So when the market recovers, and the market always recovers, it's just a matter of time. But when it recovers, you have been buying now mutual funds at a cheaper price, and when they go up, they go up. Okay, with that said, we're going to go ahead and wrap up today's report with KR at 56%. The Alpha is at 5%, beating the S&P at 4.4. And with that, I thank you very much for stopping by and checking it out.